Who broke it? I'm not mad. I just want to know.
I did. I broke it.
No, you didn't. Tom?
Don't look at me. Look at Ben.
What? I didn't break it.
Huh, that's weird. How'd you even know it was broken?
Because it's sitting right in front of us and it's broken.
Suspicious.
No, it's not.
If it matters. Probably not, but April was the last one to use it.
Liar, I don't even drink that crap.
Oh, really? Then what were you doing by the coffee cart earlier?
I used the wooden stirrer to push back my cuticles. Everyone knows that, Jerry.
Okay, let's not fight. I broke it. Let me pay for it, Ron.
No. Who broke it?
Ron, Donna's been awfully quiet.
Really?
Yeah, really.
I broke it. It burned my hand, so I punched it. I predict 10 minutes from now, they'll be at each other's throats with war paint on their faces and a pig head on a stick. Good. It was getting a little chummy around here.
Good morning, good evening, good afternoon. Depending on what time you're watching this, it's Sunday, August 20th. Just after sunrise over there on the East Coast for you guys in the U.S. And we are going to go over the week that passed and week that's coming. Because, last week, where are we here? Spreads. Sold puts every day. Excuse me. That Wednesday, where we had that sell down, did have the alert over there in the room on that, where right there around 1046. The 44.30, 44.35s are down to $1.30 if you want to jump out and take your plus $1. And that was the prudent trade to do because we wound up selling down just after that minus 1% day the day prior, where the safe trade worked, the risk trade did not. And wound up getting a little bit better, almost close to 50% on that trade. But the rest of the week, full credit all the way down every day of the week, except the trade of the week. The trade of the week got bagged. Trade of the week got bagged. We started out, everything looked great. Had that day on Monday, 44.58 open, 44.89 close. Closed green. It was looking like we were going to get two red weeks and get a green one. And then the week turned out like that. So, yeah, the trade of the week rolled mine over, and I am dead honest here. It's fingers crossed for this week, and I'll bring you over as to why. First, we go through the SPX starting here at August 1. August 1, 45.78 open, and we are down to 43.69. We've got a 249-point month. Semi-sufficient, but things don't line up. They don't line up in any way, shape, or form. Show you here, again, you got to put on a little bit of a tinfoil hat. QQQ, also 3 red weeks, down 24 points on the month, 6.32% for the month. We'll get into the 8.58%, the fake print that got hit. We hit the 23.6 retracement down to the 2023 low. Did that on Friday. So all of the 23.6s are sufficient. 38.2, still not yet to the March low, hanging like a Chad. But your full moon is on August the 30th. So again, with a little bit of a tinfoil hat, it just doesn't fit that it's over. And this week, as you all know, 2 things happening this week. Click on the right tab to me. NVDA, Wednesday after the close. Jerome Powell at 10 o'clock on Friday from Jackson Hole. So I'll bring you here really quick into the charts. QQQ, start off there. Little bit of a gap from when we first started. Big gap from 2 weeks back prior when we had the CPI. Little bit of a gap last week. Again, same thing. And only a fractional dip from Monday that is unfilled, which was filled overnight as things were looking good. But again, that was when you go back onto it, Fitch came out with their downgrade prior to the open on major U.S. banks, including JPM, possibly downgrading all of these banks. That was how we got our minus 1% day over here on the SPX. Again, back over on QQQ alone. Very structured here as a 1, 2, and right to that 23.6 retracement to the 20 to the lows, going back over there at the start of the year, right down to the fake print, perfectly down to the fake print. Now, on a clean look, again, looking here at a structure of this, you've got your 1, 2, or your AB, and we came right down to the 200 extension, right there and held it, had that dip down on Friday and closed back above it. So should be these 3 green weeks that we got, as I've shared before, and I'll show you again, are a rarity. They do happen, but it should be all of it. I don't know who's going to fix it. I don't know if it's NVIDIA. I don't know if it's Jerome Powell, but fingers crossed, it should be a green week. Green week meaning closing above where we open on Monday, not meaning that we're going to be taking out any other highs. So VIX, again, same thing. Gap over here from way back in May, and we went right to the 23.6 retracement, back to the 2022 highs. Right to it, right there on Friday, 1888, 1892. Just came over and nicked it. And again, reason we were able to be bullish there on Friday was because the VIX gets crushed on Fridays. That was our main support, having also been oversold on all your main timelines. And we dropped down almost to the February lows down there at 17. But as you can see here, last week was just straight on up. Every bit of bad news that could come out last week continued to come out. All we had was that dip down all week long. Started out here Monday, things looked all right, and then we just faded off, tiptoeing all the way down to the COVID lows there on Thursday. Then the breakdown below 5%, gap down on Friday, right down to that 23.6 retracement. Just made contact with minus 10% from the all-time highs. And then we faded up for the course of the day, looking as if we were going to get a close up there around that 43.83.72. But yeah, decided, nah, we'll keep it down here because that's where everybody was. And that's why you had yourself a red close down 65 cents so that they could make it 1, 2, 3, 4. 4 red closes in a row. Not that that's sufficient, because, yeah, you had 4 in a row over here back at the beginning of the month. But, yeah, 4 in a row. We had a green close on Monday. We had a green close last week, Thursday, and last week, Monday, as well as the last day of July, which was a Monday. Don't tend to see 5 red closes in a row. I can't remember going all the way back when the last time I had 5 red closes in a row. But yeah, 3 red weeks, minus 107, minus 27, minus 88, 155 point range last week. So again, looking at all of this from a data point of view, data supports we should get a green week, meaning that we will close above where we open on Monday. But with NVIDIA and Jerome Powell on Friday, this isn't the kind of place to be putting a big trade on. Same thing, going back again. Full moon is on August 30th. That is a week from this week. It's a week from this week. Not the place to be putting on a big buy the dip trade for now. Go back onto the charts here, and again, let's start looking and focusing here on SPX. Everything falls into place with the SPX, so we're going to stick with this just so that we can discuss where we are, how we've gotten here, and what the possibilities of higher or lower are. Looking back here at my count, this is my weekly count. This is my view, which is cycle 3 topped at COVID. That was your cycle 4, that big drop, 35%. Cycle 5 for me of primary 5 topped when we went into 2022. This is going all the way back to 1933. So the end of the end of the end of the bull cycle for me. Bring you on here to a 2-year and onto a daily, because we're going to be looking here at the ins and outs of this. Here's our drop here in January, right down to the Russian invasion. The day Russia invaded Ukraine was where we bottomed. Then we had our big bounce there as we went into March. Huge bounce. That bounce, when we came up to it, right, as we topped, we dipped down right to the 23.6 retracement of that bounce. And our bounce went just a little bit greater than the 50%, right up there to that 61.8 retracement of this dip. And then, as you see, we fell apart. Right on down, all the way down to the June lows. June. Come off the June low into that August high. And again, same thing. Big old rally up here to 43.25. When we dipped, now granted, it was a much faster dip with a gap down here over on August 19th. We came just to the 23.6 retracement, just below it, as we came down here into August 24, bounced up to the 38.2, and then, as you all know, down into the October lows, down 1,327 points from the January 2022 highs. The rally that we've been on now has now taken us to 1,115.5 points up to that 46.07. Back here in December, you had a 336-point dip. Back here in February, a 387-point dip. Now looking at this as the 1-2, the bounce off of October, as all through October, November, December, we were calling for 4,100, 4,200. We made it to 4,100 and a couple of pennies. And then we had the 4 red weeks in a row of December, where we bottomed out, did not get the Santa Claus rally the last week of the month, and then January took off. This was our full moon here as we went into February 1, got our dip. Our dip went down all the way. We'll bring it on here just to show you. Our dip came down from full moon to full moon. All right. On the structure of this bounce since that March bottom, it has been very leery. We invented the word AI as we came here into April, and we still chopped around until we went into June. And as you all remember, at the end of May, we got the debt ceiling agreement. The debt ceiling agreement came off. That was where we started to spike and head up higher. We came right to our big 44, 34, 36, got our little dip there in June at the end of it. Couple of gaps, move up, and a very nicely structured, what looks like a 1, 2, 3, 4, 5. Coming up to 46.07, right to the 138 extension of this, almost to the penny. Now the decline. The decline that we came down to on Friday, 43, 43.81, right to the 23.6 retracement, going back to the October lows, the 2022 lows, right to it. The decline, 271 points. Still above the August highs, 43, 25, 28. Now, coming into this and looking at the way that it's been structured, and again, I'm notching this, like I mentioned weeks ago, this is looking a little bit scary that we might have done all of the bearish B bounce and the decline well past the 2022 lows, well past the COVID lows, more like going down to 1,800, 1,500 on the SPX could be started. But I disagree. I disagree in a number of different reasons, and we can get into that at a different time. Here's your decline. Your decline coming right down, again, right below 43.73.50, the 100 extension off of the October low bounce, right down to the 23.6 as we came to it on Friday, and then we got our bounce. So, again, let's look at this from a wider structure point of view. Our 4607 down to 4335. So in a perfect world, let's draw it the other way. In a perfect world, the bounces that we're looking for are going to be right here. And this helps you guys to be able to draw if you want to be practicing or taking advantage of your drawings, because your drawings are always going to tell you what's up. So here, 43.99 is the minimum. 44.39, obviously, multiple reasons for that. A 50 retracement would take us back to 44.71, right? 50-day moving average being here at 44.53. I would be reluctant to believe that we would be able to break that 50-day moving average without either one, a massive surprise out of NVIDIA, which is a Ponzi scheme, and I can't get into the multiple different things about NVIDIA that are totally wrong, but the stock is up and only 10% from the all-time highs. The 50-day moving average is obviously what you would be looking for this week to be a high-end top. Jerome Powell speaks on Friday. Friday as of Friday, 10 o'clock in the morning on Friday. Jackson Hole has been well known to be a big bad boy of a day. Shared it to you in your email. I'll continue to share it all the way during the course of this week. However, where we are and what we've done is sufficient. Okay, I want to make that very, very clear. Where we are and what we have done to the downside is sufficient for this decline, for this pullback. All of our charts, 98% of them agree, yes, this is sufficient, and we should be looking at a bounce to come from now. Now, I'll bring you in a little bit wider, again, because we want to see where did we come from and where did we go. Again, looking over here at August, how we had that bounce, and then we had the further decline. Bring you out, again, over onto our full moons. Topped perfectly there in August. Then got a pretty strong decline. Then we topped again right there in September, and then got a pretty strong decline down into October. Very obvious. But what you were seeing a lot more were tops and bottoms, tops and bottoms, tops and bottoms. Bottoms here, bottoms here, bottoms here, top, bottom, middle, support bottom, called it a bottom, called it a bottom. That's the way the full moon worked. So we're going to be coming up here. And again, because we have a full moon coming on August 30th, not this week, high probability, okay, that's all I'm saying, high probability that you are going to get one of two things. You are going to get a bottom a little bit lower, or you're going to wind up getting a top a little bit higher than where we are, but a little bit lower. And this is the reason why I can tell you that, because like I shared with a couple of you already over in the spread room on Friday, here are your Septembers. September 2019, minus 5.49%. Started on September 19, finished on October 3. 2020, 35.88, 32.09. Started on September 2, ended September 24. 2021, minus 5.28%. Started September 2, ended on September 20th. And then you had last year, 2022, minus 12.9%. September 12th CPI, there's September 12th right here, right there. And then you ended on September 30th, as far as where your dip was for September. Had your little bounce, and then you went down into the October lows. 13% decline there. So September is coming, okay? September is coming. September is coming. September is coming. So either way, that's what we're looking at here. We get a bounce up here, and we get overbought. Something in the range of, like I was showing there, I'll pull this out here. A little bit closer and go back to our weekly just to see. Get a bounce up to around 44.71, up into that range. It would behoove people to be looking at it as, okay, we have a green week. There is a strong possibility that as we approach into the full moon, we are most likely going to be topping if we are headed up into that area. A sell down, very clearly, looking for something maximum down to around 4,200. I don't think that we can get down to 4,200, but it's Jackson Hole and it's NVIDIA. Somewhere around here, 4,180, 4,200, then it would be a very, very strong and sufficient buy the dip scenario to head into the latter portion of the end of the year, September, October, November. Septembers are not always bearish. 2018, decent month. Wasn't great, but that was where we topped out. 1,115 points off of the October lows, and we are down 271 points. So sufficient room to the downside, and that's what I want everybody to be cautious about. Even though we do have three, okay? You've got here 3 red weeks. And you come all the way back here to 2018 where we topped out, and you start counting your weeks. 3, 3, here's 3. Here was 5 during COVID. 3, 3, 3. 7 last year off of the March high. 3, 3, 3. We had 4 in December. 3, 3. Getting 4 red weeks is just not, it's just not in this video game. It's not there. So caution for anybody who is playing on the short side still. However, on that upside, I'd be very, very careful about what you're looking at from a shorter term time frame, because you've still got your full moon coming up here. And so for me, the best case scenario is something around here to around this 44.80, just above the 50-day moving average, which is going to be a bitch to break unless we're going to gap up above it. NVIDIA could do that. Could. And then you've got your 44.67 and your 45.05 right above that. So again, caution when you are going to be playing this. Caution, caution, caution. Oh, that's going to be moved down. I didn't move it yet. Haha. 43.35. And there you go. Your 50 retracements would all take you right there around that 44.70 area, right below that gap. Everything is lined up bearish. Everything. A short-term bounce for a green week, highly, highly probable. Highly probable as we're going into this week. Upside potential, not much more than this 44.70, 44.80 area. So be very, very careful about how you are looking at this in every way, shape, and form. So to close you off, send you guys out on your nice hot Hillary Clinton party. NVIDIA coming off the January lows. NVIDIA. Boom, boom, ba-boom, because AI is so important. And this 400 is still unhit. 392 is still unhit. This is your gap above your old all-time highs, right around that 366 area. I would like to see NVIDIA come down into this 360, 345 area, but I'm not going to hold my breath. You see here with your Amazon. Amazon, nice little ride up, although it was very oversold. And as you've come in here into earnings, big gap over on earnings. And even though we came down to the 50-day moving average there on Friday, we have not filled that gap. Google, same thing. Big move off of earnings where AI was introduced over here last year. last earnings season, and where we are now with their earnings season and the AI stuff, and still not able to get down below 126 and fill that gap. Also very oversold. Bring on to Microsoft. Microsoft, big sell down, having been hacked, but as you can see here as well, no structure whatsoever to this. Just back down here to the March 22 all-time highs. Gap is filled. There's really not much left on this downside movement here to Microsoft. There isn't. Apple entered into the beginning of, yeah, go ahead, buy some shares right here around 173.88. 165, that would be excellent. But as many people know, getting down to 165, highly unlikely for now. And leave you lastly with, well, yeah, the Mets. Might as well be. Here is your meta. Although you have filled that gap. Sorry. We have filled this gap, number one. Let me remove this real quick. We have filled this gap, number two. Sorry, guys, I'm working on this. I'm working on it. We are still in this gap down from last year. Oh, got to go wider than that? Jesus Christ. We're still inside the gap down from last year where the metaverse took a shit. We're still inside that gap down, which is over here at 248 as the high. Still up well over 100% on the year. So I'm sharing this for the purpose of not trying to get people to join the club that also hate Facebook. While our dip on the SPX should be sufficient for the moment, there is an insane amount of profit taking that is on the table, very possible and scary about this entire move for the year. Okay, we'll just go year to date, look at 1 year. Microsoft, 213, 366. Apple, lows all came right there at the beginning of the year, 124. All right. NVIDIA, you know about already, just absolutely stupid the way that this has gone. And I leave you lastly with Tesla. Tesla, dangerous, very dangerous. Almost came down to our 208. Almost. But still, up here at 215, it's up 100% on the year. So a little bit of caution about being on the bullish side, but not saying that it's completely over, but a little bit of caution over on the bullish side. Right over here, your high is 217.65. Breached your high. This is a big, big no-no. Big no-no over here on Tesla. So be careful. Be really, really careful, because as you came up there, like we shared before, breaking that trend line, here you are. You're right back down inside of it. So anyway, guys, leave you on that. SPY, QQQ, you got it all. I'll have it all in the charts in the weekend. 5-day 15. Yeah, again, same thing. Dropped down below 5%, came right down to the 23.6 retracement, down to the March lows. Avoided being 10% off the ground, off the all-time highs. One gap to be filled from last week up here. Me, personally, best case scenario, that's about as bullish as I would expect. Something up here in this 447, 448 area. Not going to go out there and get out on a limb with a 17 VIX and go be buying 447 calls. I'll have some trade ideas for you later as we get into Monday morning. Have a great weekend. Have a fantastic Sunday. And I'll see you guys in the chat room.